Can everybody see both the screen share and my webcam? Yes, yes, yes. By special request from Drizzy. Okay, perfect. Oh my God. Wow. Yeah, I dropped the memes. Let's go. Okay, perfect. Make sure it's recording. Yeah, it is. Okay, but I couldn't get my desktop webcam to work, so I'm on my Mac webcam, but so there might be more glare because it's there's still light out, but you should guys should be able to see me. No, I'm not a microphone. Yeah, some people really thought I was AI, but I think some of you have seen me on video before on I've done YouTube stuff with other podcasts and stuff. So some of you have seen me, I think, but maybe the majority of you haven't. I don't know. I mean, you already know how I sounded, but maybe I sound different now that you can see me. I don't know. Maybe you think I sound Italian now because you think I look more Italian. Yeah, a lot of people did think I was like a big fat guy based on my voice just because I have a deep voice, but I'm not. Big fat Greek. Some people do think I'm Greek. I have gotten that before. I get Greek a lot. I get Persian a lot. I get Italian. Um, I'm gonna wait like 2 or 3 minutes till everybody get in here, and then we'll talk. It actually does make more sense though for the next like 4 or 5 workshops to me be for me to be doing a webcam anyway, because I'm gonna have the charts pulled up just for reference, but we're not gonna be talking about the technicals as much as I have on some of the other workshops. We're gonna be talking a lot more about like stock picking on the next 4 or 5 workshops. Um, so yeah. Oh yeah, I'm not on my main mic, so I might sound different because of that too. Oh my God. All right, let's keep it PG in the chat, guys. Remember. Okay, we'll get things started in like a minute, or maybe even less than that. I need to get my I have some notes. You guys know I don't generally like prepare stuff. I'm never gonna like you're never gonna pull up on one of my workshops and there's gonna be a PowerPoint presentation. I'm just telling you that in advance. Like I don't do that. Um, I just try to kind of go off the dome. I think it works better that way. Um, anyway, but I do have some notes just because there's a handful of stocks I want to touch on specifically. Um, I know I always say to reserve questions for the end, but on these next few workshops, you guys can just ask me questions live if they're relevant to what we're talking about. Like if there's a stock that comes to mind where you're like, hey, is this relevant to what you're talking about? Put that in the chat because I have the chat pulled up anyway. So it's not going to be like it's not going to be a big deal for me to talk about a handful of other stocks while we're going over these. Okay. So yeah, let's get into it. All right. I talk a lot about I sort of make fun of or tease in a way um people in the market who are religious about their strategic philosophy. And what I mean about that is like the chart guys who say everything is in the chart and the fundamental guys who say I've never read a chart in my life and I've done well. I think both of those people are being ignorant in a way, like intentionally ignorant, willfully ignorant in a way. And I haven't believed this for a long time because when I started trading, I was just a chart guy too. And I think most people when they start, that's what they get introduced to trading from, right? Because most people on Twitter are like posting charts or like talking about technical setups or wedge breakouts or high tight flags or whatever. And you get exposed to that and you make a habit of like thinking of stocks as setups, right? And I think when you're new to the markets, that's how you picture it. You're like, oh, like everything's a setup. But I think over time, when you see stocks that perform insanely, not just for a couple of months. but just keep performing, right? Year after year after year. And you're like, they're going higher and higher. I think two great examples of this in recent history are Robinhood and Palantir, right? Where like they had crazy 6 month runs and everyone was like, you know what? These can't go much higher. Like, yeah, retail caught lightning in a bottle and they made a couple 100%, but these can't go much higher. And they did, right? I mean, both of those stocks just continued to go higher and higher and higher through earnings reports, through market corrections. And there's always stocks like that. Like those are just two retail favorite examples of the last 5 years. I mean, Nvidia is another one, Tesla is another one. Like you can go on and on and on and find stocks that have gone up 1,000% in 5 years, right? Like there's a bunch of them in the modern era. And when you think about stocks like this, you should be, in my view, if you're going to participate in the markets, focused on trying to find stocks like that, right? Like those are the stocks that you want to own. Like philosophies aside, the school of investing or trading, put all that aside. Like what school you come from, whether you're a value investor, like at the end of the day, you all want to make the most money possible, right? That should be everyone's goals in the market. I think you'd be naive to think otherwise. So if that's the goal, then is like is finding these stocks, is finding the Teslas and the Nvidias and the Palantirs and Robinhood, is it is it purely a technical game or is it purely a fundamental game? And I thought about this question for years. Like when I was like I caught Tesla not because I didn't think Tesla was going to do what it did when I bought it in 20 beginning of 2015, end of 2015, beginning of 2016. I didn't think it was going to be this crazy phenomenon in the markets. I just thought EVs were going to be a thing and I thought it was a good investment. Like that was really as simple as my thinking was. So I wasn't undergoing some crazy strategic process back then when I picked that. But I just got lucky. That's the truth. I got lucky. Okay. A lot of people get lucky in markets and they pick a stock that goes crazy and they don't acknowledge it as luck. They think they like, made some genius decision. I didn't make a genius decision with Tesla back then. I just got lucky. Okay. And but if you want to take the luck out of it and say, how do I pick stocks that are going to make moves like that durably and sustain those moves over 5 and 10 year periods? What do I need to do to get there? Well, I know for sure it's not value-based investing. And I'm not knocking the value-based guys. Like, I'm not mocking the PE bros or whatever. Maybe I am a little, but I'm not like insulting that line of thinking. You can make great money doing that. You can become a very successful investor doing that. So if you do well doing that, great, good for you. But what I am saying is those guys aren't picking those stocks. Definitely not, right? Tesla was expensive always. Palantir was expensive always. Robinhood was expensive always. Right? These stocks, there was never a point in these stocks' histories when they were young companies, medium-sized companies, or now when they're $100+ billion companies. There was never a point where they're like, oh, the P ratio is attractive, or the earnings of the company is attractive. Like never. Maybe a glimpse. Like maybe you could find a quarter somewhere along the process where a value investor could have justified a buy. But to hold those stocks, no. Right? So I know for sure it's not that. And then I ask myself, okay, well, is it the charts? Well, no, because none of the chart bros held those stocks. The technical traders who traded those stocks on the breakouts and the run-ups, none of them held Tesla from 20 to 400. None of them held Palantir from, I mean, maybe they did, but they didn't do it by virtue of their technical philosophy. Do you understand what I'm saying? I'm not saying there weren't technical traders out there who invested in Tesla or invested in Palantir. I'm sure there were, but they didn't do it because of the chart. Do you see what I'm saying? They didn't do it because of the wedge breakout or the high volume accumulation or the Drizzy. Thank you, Drizzy. Or the high and tight flags. They didn't do it because of that. They did it because they thought something else outside of the chart that made them feel like, okay, I'm going to buy and invest this in this stock, right? So I know for sure picking the best stocks doesn't come from the chart, and I know for sure it doesn't come from value investing. So what does it come from, right? And I thought about this question for years. And what I'm going to try to do over the next 5 workshops is tell you guys what I think it comes from. And it's not going to be an ABC process. It's not going to be black and white, but I'm going to try to give you guys insights in the next 5 workshops, and this will be the first of those, on what I think great stock picking comes down to. And it's, to me, what you'll learn, in my view, it's really about context. And it's about more than the chart and the fundamentals and the multiple, but it's about the thematic exposures, the catalysts that are on the table, the overarching interest in the theme, the investments that are being made in the theme from the government and multinational corporations. All of these facets come in to make what a generational stock that doesn't just go up for 1 year, but goes up for 2 or 3 or 4 or 5 or even 10 years straight. That's where you make real money in the markets. You don't make money from scalping stocks or from 10 or 15% runs or I caught a breakout. That's not how you get rich. You do it by investing in great, great names and holding them for a long, long time. And not even really that long in these modern markets. A couple of years you can get a 10x. Like it's insane if you pick the right stocks. And so I think, markets are changing, markets are evolving, and I think there's also a lot of really interesting thematic opportunities in the next 20 years, probably more interesting opportunities in the next 20 years than there have been ever in terms of investments because technology is going to change so rapidly. So, anyway, let's get into it. What we're going to do is we're going to touch on two concepts today. All the concepts we're going to touch in the next 5 workshops are outside of the chart and outside of the balance sheet. Okay. These are things that are exogenous to what everyone looks at. Okay. Today we're going to talk about rarity premium and we're going to talk about multi-theme exposure. Okay. I'm going to use some examples from my current portfolio that fit these concepts. Okay. And there are other stocks. I'm not saying I own all the stocks that fit these concepts. There are other stocks that fit these concepts. Some of you, while I'm talking, may have a stock that comes to mind. Put that in the chat. Okay. Because then I can jump to that and we can talk about that. That can make these workshops more dynamic and stuff. If you want to be, for those of you that are tuning in live, if you want to be really involved, that's how we can make these more dynamic is throw a stock at me, be like, hey, does this fit rarity premium? And then we can talk about it. And that's how you'll learn too. So let's um let's do that. Okay. So yes, I know what you're gonna say 2030, and we will talk about Galaxy. We will talk about Galaxy. Well, okay, never mind. I misread your mind. But yeah, I was gonna talk about Galaxy when we talked about multi-theme exposure, but anyway, we'll get to that. Um yes, I meant that. Okay. Let's start with my largest position by weighting, which has been my largest position by weighting now for what, almost a month? I don't know exactly how long it's been, but it's been a while. Um, which is Centrus Energy. You guys can see the Centrus Energy chart right now, right? I just want to make sure because I have the webcam up, but I can't see the other screen. Okay, cool. The chart's just here for reference, by the way. We're not going to do the whole moving average analysis stuff that we do on some of the other workshops. If you guys want to look at that, go look at my swing trade like a pro workshops. I cover the way I look at moving averages on those. Um, so Centrus, we got in. I don't know. There might be some new members on the call, so I like to always recap when we got in. Sometimes when I touch on these stocks, people are like, "Oh, are you buying this next week?" Like, sort of clarify that kind of stuff before we go into it. But so Centrus, we got in at 96 here. This was the after hour. We got in after hours, and then this was the next day move, this gap up. And so it's been a while, and I haven't sold one share since then, right? And again, we were talking earlier about like the difference between the chart bros and the PE bros and whatever. Like chart guys would have sold this already, right? Like, I mean, you double your move. Like if you don't know the story here, you wouldn't still be holding it, right? But we do know, or I know the story, and some of you know the story now. Um, and so Centrus has been public for a long time, 27 years, since 1998. This spinoff of the DOE. And when I talk about rarity premium, what we're talking about is a reason for a stock to trade more expensively than it should, according to traditional valuation metrics, right? And Centrus is one of those stocks, right? I mean, it's not cheap on a PE basis at all. It's not cheap by any really any metric, right? So why do I own it? And why did I buy it at 96 and not sell it after it more than doubled? Because, well, first of all, this is an insanely bullish monthly chart for anyone that is looking at this. 200-month moving average emerged back in mid 2015 over here. And so it's been a decade since this 200-month moving average has existed, and we just tested it this month. So I don't know, to make what you will. But again, we're not going to get too much into the charts. But um, Centrus Energy is the only publicly traded uranium enrichment stock on planet Earth. Like the only one, right? And I've said that over and over and over again, but it bears emphasis because um, people still don't get it. When we had the JP Morgan downgrade on this stock, that's when it fell. It was back here. Okay. So back here, JP Morgan came out on the stock and said, look, we don't get it. Fundamentally, and they did their whole PE analysis, right? Fundamentally, it doesn't make sense for the stock to trade here. Like, yeah, we get that people are interested in it because of the nuclear thing, but fundamentally it doesn't make sense. Stock fell from like whatever, 211 to like 150 on that JPM note. And then proceeded to consolidate and then went higher and then proceeded to consolidate and then went higher. And the reason why I disagreed with the JP Morgan note, and I posted something in my journal when it came out, was I said, that's not the thesis behind people who are investing in this name. People are not investing in this name thinking that there's earnings power around the corner. People are investing in this name because they know that the United States is A, taking a more aggressive stance on nuclear energy, and B, that the only way to get enriched nuclear fuel from a domestic source is through Centrus currently. There are no other pure plays on uranium enrichment in the market, period, end of story, nothing, no alternatives. So if you're somebody, an investor that says, well, we need enriched uranium for fuel, for the nuclear reactors, for nuclear weapons, for every purpose of nuclear energy, and you need enriched uranium fuel. I want to invest in an enricher, but I don't want to invest in a foreign enricher because the United States is taking a domestic policy stance on enrichment. Well, then what are you going to invest in? This is literally the only thing you can invest in. And still it sits at a 4 billion market cap. The way I like to think about Rarity Premium when it comes to stocks like this is what would this company trade for if you put it up to bid on the private markets? What would it trade for? Do you think somebody would pay more than $4 billion for the only uranium enricher in the United States, the only domestic uranium enricher in the United States? I do. I think they would pay a lot more than 4 billion. A lot more, right? And that's the thesis. And that's where Rarity Premium comes into play. And that's why Rarity Premium is something that, again, you don't get off that. Originally in that introduction to this workshop, I talked about this idea of that's not something you pick up off the balance sheet. On the balance sheet, those stocks are going to look expensive. They should, because there's no other way to get exposure. And that's what Rarity Premium is literally in the name. It's about the idea of the asset being rare. There is no alternative to the asset, right? So you say it's the only US listed, US technology based producer of HALEU, right? Which is critical for every initiative we're taking already, right? Then on top of that, you say, okay, they have decades of enrichment expertise that you can't just easily replicate, right? On top of that, they have proprietary centrifuge tech. They're DOE backed. The DOE is exercising new contracts. They have SMR rollout, which is coming, which needs enriched fuel, which needs HALEU, right? Which is only produced domestically by them. And so all of this contributes to Rarity Premium in one, right? And so it's a quasi monopoly, really, on Western HALEU supply. And it's trading at a 4 billion market cap. I don't care what the PE is, right? The chart's bullish and it's trading at a 4 billion market cap with that kind of premium. That's why I haven't sold any, right? Now, am I a buyer up here? No. Why? Because when markets pull back, Rarity Premium is part of the speculation premium that's going to get crushed, right? When markets pull back, the first thing to disappear is speculative premium. That's why stocks like Tesla or Palantir or these stocks fall the hardest when markets really aggressively pull back because a ton of their valuation is baked into speculative premium. And there's a ton of things that go into speculative premium. It's just speculation, right? But rarity premium is one of them. Is this idea that the rarity of the asset gives us more value? When markets are pulling back, people lose sight of things like that, right? But when markets are structurally intact and they're going up and things are working, then that becomes a tailwind for the bid, right? And it keeps people in the stock. And that's why, in my opinion, you've seen such a steady bid under the stock, in spite of the pullbacks and a willingness to buy the pullbacks. And even after, like, keep in mind, this stock into the earnings last week basically went up more than 2x in less than 3 months going into earnings and still went up 20% on earnings. Yeah, it faded. It faded like plus 10% or whatever. But you still got a gap up on earnings after the stock more than doubled on nothing going into it. That's extremely rare, right? And to me, again, it's a nod to this idea that this is a rare asset. And the market's saying, hey, this is an extremely valuable domestic asset that has no peer. And so we're willing to pay a higher valuation for it. And I think even now they will be willing to. And I think when you look at the monthly chart of this thing, like, look, I don't know what's going to happen to the broader markets, but should the broader markets continue to march on, you scroll back 25 years on the Centrus Energy chart. Like, look at the range we're talking, look at the top of this range we're talking about here. You're talking about, you know, I'm not saying it's going there, but you know, that's a pretty bullish monthly chart if I've seen one. And all the volume is here. Like all the volume is on our side of the chart. So yeah. Anyway, Leo, you want to see him? Okay, here, hold on. He's on the bed right here. Leo, they want to see you. There's Leo for the stream. Okay, he's sleepy. Anyway, my stuff's in the wash for my bed, so it's just like the under part of the bed on there, but he's sleeping on it. I wanted to say hi to you. He's mad that I woke him up. Um, okay, let me see here. Hold on. What are they doing? Oh yeah, Centrus. Okay, so on the topic of rarity premium, I think I explained that pretty in a pretty detailed way why there's rarity premium here, but we'll talk about a different one. Let's talk about Huntington Ingalls. Okay. Well, this one also has a gorgeous monthly chart. Look at this multi-year consolidation here, not coming to the top of that range. But anyway, so Huntington Ingalls. So remember when the Trump administration made it obvious to everyone coming in that they had a couple of things on their agenda, shipbuilding, nuclear. I mean, we just talked about nuclear, right? But somehow for 3 months, all these stocks in these spaces just did nothing and consolidated in spite of that, right? Like they made like 5 or 10% moves um, coming out of those comments, but then like people just forgot about the idea that the administration was prioritizing those things, and people forgot about the idea that when like look, when presidential administrations prioritize things, they don't always get things done. But when it comes to the military, they usually do, right? Like that's the one thing that the president does have a general purview of and can't directly control the spending, but effectively, especially when they have the congressional support that Trump has now, they can get things done. And with the very specific package that they passed under the big beautiful bill, the defense extension package, there was a lot of money allocated for shipbuilding, 27 billion, right? And back when I put out the original note on, let me check actually when I put that out on Huntington Ingalls. God, it was many months ago. I don't know. I'll search for it later. My phone's not loading on my Discord right now, but search from Stock Talk Weekly HII in the Discord, so you see when the original alert went out. But we were getting into it right here in this area. I think we got in like 215-ish, maybe 214-ish, something like that. And stock was emerging with the 200-day moving average. You guys know the type of setup I like. I mean, pretty much everything I initiated. Parsons on Friday, which I initiated, you guys know, same sort of thing. Pushing up into or just over the 200-day, bullish volume, like that's the kind of stuff I look for. So anyway, we got in around there, and it's this thesis was simple here, right? Another rarity premium play where with Huntington Ingalls, you have a massive amount of money being allocated to shipbuilding, and this is the sole subcontracted and primary contracted build U.S. builder of U.S. nuclear aircraft carriers. Okay. And again, you're talking about, well, which is now a 10 billion market cap, but when we got into it, it was a sub what 9 billion market cap, and I still think it's cheap, frankly. It's why I haven't sold it. Um, and you look at every General Dynamics contract, okay? You go to the subcontracting list. Go look up, I mean, any General Dynamics shipbuilding contract, and go look at the subcontracting list. You'll find these guys on every subcontracting list, every one for General Dynamics shipbuilding, right? General Dynamics is a what's the more General Dynamics market cap? 85 billion market cap, and they can't do anything in the shipbuilding space without Huntington Ingalls, right? And you're talking about a U.S. shipbuilding initiative now that got its biggest supplementary package at 27 billion in I think like over 4 decades. So that's insane. Like that is a genuine pivot in US spending policy towards domestic shipbuilding. And these guys are irreplaceable. They have decades of institutional know-how on shipbuilding. They have backlog worth tens of billions. You know, their capabilities can't be replaced easily. Okay. And they get a valuation premium from that rarity premium. If you want exposure to US shipbuilding, pure play exposure, right? Yeah, you can buy General Dynamics at an 84 billion market cap, but if you want pure play exposure, this is the only way to get it. This is the only realistic way to get it. They had a great earnings report, last report, by the way, which is why the stock continues to go higher. But it's also the reason why I haven't sold it. Again, like this is a stock to me that probably breaks out of this multi-year monthly consolidation and goes much higher. You know, like we've been sitting up here. We had this top of the range around here, 246, 247. And the last couple of months, not only do we emerge above that, we cup down here and cut back up. And now we're consolidating back above the highs here, closer to 290 and above this 246 band. This looks to me like it's about to unlock new price territory. It's acting a lot like it to me. And for good reason. If U.S. shipbuilding keeps up and the pace keeps up and we keep seeing these inflections on incremental packages, these guys are going to be the best way to play it. They're going to be the best way to play it. Anyone who wants exposure to that it would be insane to not buy Huntington Ingalls. It would be insane to me to buy General Dynamics over Huntington Ingalls if you want pure play exposure. So, yeah, to me, this is a no-brainer play in the aerospace and defense basket as well. And it's why, like, outside of, I mean, Embraer, you can count as an aerospace play, not really an aerospace play as much as Kratos and Huntington Ingalls. So as far as the real defense names in my portfolio go, it's really just Kratos and this guy. That's it. And we'll talk about Kratos in the back half of this workshop when we talk about multi-theme exposure, because Kratos fits that. But it's this and Kratos for me. These are like to me, if you want exposure to US based specialized defense, I think you buy Kratos and you buy Huntington. I think you own those, and I think you're good, to be honest. And I don't see the need to have much more. Mercury Systems, who reports next week. I think they report Monday. That chart actually also looks fantastic. They might even break out on that name, but I used to own that name. If you really want to add a third, I would say add Mercury Systems because they're indisposable when it comes to like munitions and precision guidance and all these themes that are picking up in the market. So, that those three really, if you really want to own US based specialized defense, which I think is a great thing to own for the next decade, those three to me could go from being newly minted large caps, right? These guys were mid caps. Kratos and Huntington were mid caps. And they're newly minted large caps now, barely breaking into that 10 billion territory. To me, there's a realistic scenario in the next decade that these guys become 30, 40, 50 billion plus dollar companies. Um, if they continue to capture the kind of momentum that they have been. So, yeah, I mean, I love Huntington Ingalls. It doesn't get talked about. No one talks about this stock. No one. Like you go on Twitter, no one's talking about this stock, but this is to me a sexy stock. I know it's not like, a tech stock or whatever, but it's a sexy stock because it has rarity premium. right? You can't get US shipbuilding exposure in a pure play way again unless you're going to buy General Dynamics at 85 billion, which I don't know if I'm a buyer of that. They have a diversified business. General Dynamics is not just shipbuilding, right? And so if you want pure play exposure, you go here. And that term pure play kind of goes in hand with rarity premium the way that I'm talking about it. Okay. In the context that I'm referring to rarity premium, you can think about it as pure play exposure. Okay. And sometimes when you want pure play exposure to something, there's a lot of ways to get it, right? There's like, for example, if you want like pure play Bitcoin treasury exposure or something, there's a lot of Bitcoin treasury companies. If you want pure play, whatever, like there's a lot of ways. In some cases, there's only one way. There's only one pure play exposure, and those stocks do trade at premium multiples, and they should trade at premium multiples, right? Because it's just supply and demand. It's just supply and demand, right? Like if if you are if you're thinking about stocks like, hey, there's a limited amount of stock available and there's a limited amount of parties interested in that stock. And now I'm going to say, okay, what is that stock worth on the balance sheet? What is that stock worth with the exogenous factors that might affect the valuation? And then what is that stock worth simply because of the added supply and demand imbalance because of the rarity premium or the pure play exposure? Then you get closer to what the real valuation should be. And that's why so many of the people that think about stocks strictly in terms of the balance sheet miss the best names. That's why. Um, and yes, BWXT, which JS4 just brought up, which is one of my favorite nuclear names, is another great example. BWXT is an extremely rare name with a lot of pure play exposure and is a great example of rarity premium. And I used to own that stock and I sold it and I sold it too early. And I didn't, it's not that I sold it too early because I didn't want to own it anymore. I sold it simply out of a portfolio management decision. But yeah, I mean, that's one of the names I regret selling. That and Talon Energy, because both of those companies have executed flawlessly. But yes, BWXT is a great example of rarity premium, well deserved. And BWXT is irreplaceable. They don't have somebody that can replace them the same way that Huntington is irreplaceable, the same way that at this current juncture, Centrus is irreplaceable. Um, and those things can change, right? This is another thing. I don't want people to think that um, rarity premium is permanent. It doesn't have to be, right? Like if you're the only provider of something in a country, let's say, and another provider emerges, well, I mean, unless you're an idiot, the rarity premium has changed, right? Like if you don't like how can I phrase this in a way that makes sense? Like if you don't think that like if you were to say that the market available to a company is the global market, that only makes sense you if you have if every company has equal access to the global market, right? And there are certain inflections in policy where those tailwinds or headwinds change. And right now, over the course of the last year, we're in the middle of one where the administration has prioritized American companies in certain strategic industries, right? And so US based companies with strategic value are even more strategically valuable in the current regime than they were previously. Does that make sense? Like they were already strategically valuable, but now because of the shift in domestic policy, they are more strategically valuable, and the market should adjust for that, right? That at least that's my philosophy. That's why I own names like Centrus and like Huntington and like some of the other names we're going to touch on today, which are US based strategic assets. In fact, if you were to go through my portfolio and say, what's the biggest overall theme, right? Like take the baskets out of it. I separate my portfolio into baskets for you guys to make it easier to follow. Take the baskets out of it. What's the biggest overall theme? It's US based strategic exposure. That's the theme right now for me, right? And Centrus fits that, right? Huntington fits that. Kratos fits that. Um, Nebius, although an Israeli company, fits that. MTRN, Materion for beryllium exposure, they fit that. UUUU, Energy Fuels, which we're also going to talk about today, they fit that. So, I mean, like most of the stocks in my portfolio fit this thematic that I'm talking about, which is US based, either US based technology, right? US based investments or US based in entirety. One of those three and strategically valuable. And if you were to put those pins down, you would have been like, oh, this stock fits that, this stock fits that. And then that's how you'd get to where my stock picking has been this year. So it's about trying to okay, hey, I see some people tagging me in the questions channel. If you have questions while I'm going through the stuff, put them in the chat. Because normally I do say to put questions in the questions channel, so I know it's confusing. But for like when the workshops are live, put the questions in the chat. So then I don't have to watch multiple channels. But to answer those questions, L3 Harris, yeah, but they're a little diversified to fit what I'm talking about. So I wouldn't include L3 Harris in what I'm talking about because they're a bit too diversified to fit the description of rarity premium and pure play that I'm talking about. They're too diversified for that. Um, Kratos 170% above the 200 seems like a big stretch. Do I think it's a great buy at the current price point? Those types of questions we'll answer at the end. If you have questions relevant to sort of the concepts we're discussing, that's fine. But if you have general questions about buying and stuff like that, we'll answer those at the end. What's up, Leo? What do you want? Um, okay, yeah. So we covered Centrus, Huntington Ingalls, on Rarity Premium. We'll cover Genius Sports now. So what do you want? You want to go outside? You want to go over there? Okay, hold on. Let Leo wants to go to the other room. All right. Okay. So Genius Sports. All right. If you want to get exposure to the NFL, how do you do it? Well, you could buy indirect exposure to an NFL team, but that to me is dangerously non-winner agnostic, right? Buying exposure to a team is like you do that if you're a fan, or you do that if you like maybe the team has some crazy valuation tailwinds. But other than that, it's not a smart way to get exposure to an entire league, at least not in my opinion. So until the NFL goes public, how do you get exposure? Well, I think the only real way to do it is Genius. Why? Because the NFL owns 9%, first of all. And second of all, because they have exclusive rights through the 2030 Super Bowl. And based on the NFL's warrant exercise tradition of the last 5 years, it doesn't seem like they're going to miss the extension after that. So, Genius to me has become a very rare play, and it was a rare play when I think when we bought it. We bought it at 960. And well, I bought it at 960. Some of you bought it at 10 or 1020. Some of you didn't buy it then and then decided to chase it at 12. But whoever you know who you are. But Genius has been obviously a choppy one. It's been hard to stay in if you didn't understand the story. But if you do understand the story, it's been easy to stay in. And um, what makes Genius unique and what makes it fit that rarity premium thing that we talked about is the fact that not only does it give you unique exposure to the NFL, and the growth of the NFL, but it also gives you exposure in an industry that is effectively a duopoly. Now, the data business is a very competitive one, and there's a lot of people in data that are um, very competitive. There's people in broad-based data provision that are in multiple industries. But for the last 8 or 9 years, sports data specifically has been a really complicated area because you not only need to get league rights to provide the data, right? You then need to get relationships with books to purvey the data too, right? Because the sports books are also using the league data, as are the media networks. Okay. And a lot of people don't know this. Like when you watch Red Zone or watch NFL Network, or watch like the clips where they have like the players slowed down and they're showing you the players' speed and they're showing you the ball speed and like what they had to do. All that stuff is sports data. Okay. And most leagues have exclusive contracts with their sports data providers. So you get exposure to an industry that's become a duopoly between Genius and Sport Radar. And to me, Sport Radar has been a great company too, you know, but the stock has done extremely well lately and the valuation is expanded. And to me, the valuation here with Genius is lagging. And I think the company is not yet being valued as a software company, and it will soon once people start acknowledging the Rarity premium here and acknowledging the fact that through the 2030 Super Bowl, they'll not only have the Super Bowl, they have the Premier League, they have European soccer leagues, they're installing their Genius IQ in multiple stadiums in Europe. So all of that stuff culminating together to make them a really unique data play where advertisers now, through their partnership with PMG, who's Nike's ad agency, they are now able to leverage their data in things like Nike ads that are targeted towards fans of specific sports teams who can say, oh, we know these Cowboys fans like to buy this thing. And they advertise that thing to Cowboys fans through Genius Sports data. So it's actually a really unique angle on both advertising, general data provision, sportsbook data provision, media data provision. And to me, what really accelerated their advantage here is the deal with Disney and the NFL's deal with Disney, where the NFL is now getting into media. And on the media side, you need the data as well. And so now that has been even more accentuated, in my view, um, and makes this really interesting. So, yeah, Genius to me is another, thing that fits this idea of rare exposure, where you get exposure to the NFL and you also get winner agnostic exposure to sports betting and you also get duopoly exposure to sports betting data, which is a very, very, very high barrier to entry industry. And there's a reason why it's been a duopoly for so long. So the last one we'll talk about on Rarity Premium before we get into something called multi-theme exposure is Materion. So Materion has been a one that's acted very nicely for us, actually. So we got in around here pre-earnings, and you know, this stock when Yonezu put out the initial DD, I loved it. Like when he first started talking to me about it, he posted it I think the next day, and when he first started talking about it, I immediately told him I was like, I love this one. I'm going to end up swinging this one, and so sometimes that happens where I generally, as you guys know, don't like follow other people's ideas, but occasionally there'll be people I talk to, like namely Mystic and Yonezu, who I've known for a long time and I trust them a lot. Sometimes I'll talk to them about ideas and I'll like it myself and then I'll end up taking it. So this was an example of one of those, but I turned it into a swing because I really liked it. So we took it around here. Why did I take it as a swing? To me, this fit the idea of Rarity Premium, right? They're the only integrated beryllium producer in the Western Hemisphere. We're talking about rare metal stocks every day, right? We're talking about strategic industries like nuclear reactors, satellite mirrors, right? ASTS, Rocket Lab. We're talking about propulsion technologies, fighter jets, precision munition platforms. All of these things use beryllium. Nuclear reactors and weapons, aerospace and defense applications, space and satellite applications. These are literally the hottest stocks in the world. And the material, the strategic material that enables many mission critical systems in all of these industries, all of them, is brilliant. Yeah, it's a niche market. It's a $250 million global market. Is it going to blow anyone's socks off with the size of the market? No, but it's strategically important. And so when you have a play where, again, we're talking about the same theme over and over again, US based, strategically important, right? And I'm looking at the valuation of this thing, and I'm like, it's trading at like an 18 PE, less than one time sales when we got in. I was like, what are we talking about? Rare metal stocks out there with zero revenue are trading at 15 billion market caps. Like, what? So that made no sense to me, right? The valuation to me was way too low considering the climate around rare metals. That was point one. And point two, I was like, there's huge rarity premium here. The only integrated beryllium producer in the West, and we're not giving them the same premium that we're giving pre-revenue companies that won't be commercialized till 2029. That doesn't make any sense to me. So, um, yeah, I mean, there's huge regulatory barriers, huge infrastructure barriers here to penetrate the beryllium industry, critical for multiple super hot, super interesting industries. Um, and so, yeah, I think all that considered, it's a name that I felt compelled to get long, and I feel compelled to not sell here. Yeah, we pushed up to 111. We had like 7 out of 8 green sessions in a row, pushed up to 111, had a little bit of a pullback on Friday, but literally no structure breakdown whatsoever. Didn't even come down to the 9 EMA. So nothing to be worried about here and remaining long on this one. But this is another one that fits this idea of rarity premium, pure play exposure, fitting the current policy environment, fitting the current thematic environment. Like this whole concept I just discussed across Materion, across Centris, across Genius, across Huntington. Um, this these are the types of factors again that we're going to touch on in today this workshop, and then we'll touch on in the next few that make better stock pickers. This is what makes you pick better stocks. This is looking beyond the balance sheet and beyond the chart, right? Like, yeah, we have the charts pulled up for this workshop. This workshop, I haven't even made that many comments about the charts. I've made a handful of comments about the charts, right? the all these things are the context that is outside of the chart, right? That's what matters to me, in my opinion. That's what matters, and that's what makes the generational stocks. That's what makes the stocks that really perform very, very, very well. So, um, anyway, that's Rarity Premium. We'll touch on something now called multi-theme exposure. Okay, so what is multi-theme exposure? So sometimes in the markets, you have multiple themes that are active that are all very, very strongly bid, right? So, in other words, the stocks involved in the thematics are going up hundreds of percent, right? When that happens, you have um, you have traders that rotate from theme to theme, okay? So, and sometimes there's even fast money funds, institutions that do this as well. And so what they do is they rotate from theme to theme, and so you'll have. I'll give an example of this from last year. Okay, last year we had space, quantum, and nuclear were three really hot themes. There were many others. Okay, I don't want anyone to feel like I'm excluding their stock, but space, quantum, and nuclear last year were like really, really hot stock themes. Okay, if you go back to last year, there were periods where like the quantum theme would consolidate and the nuclear theme would get a new catalyst, and a bunch of money would rush into the nuclear names, and then the nuclear theme would consolidate, and then the space stocks would get a new catalyst, and like Rocket Lab and ASTS and Redwire would all skyrocket, right? You go back and look at the charts, you can see that playing out last year, at many, many, many different points of the year. So, one of the best things you can own in a bull market is something called a multi-theme exposure. What that means is it's a stock that gives you exposure to multiple different thematics simultaneously so that when one cools down, the stock is A, less resistant to thematic selling, and B, is more likely to participate in the next thematic rally, right? Something that's not related to the first one. Those are really rare to find and really hard to find, right? And they tend to get valuation premiums. And again, in my opinion, deservedly so, right? They tend to get valuation premiums for a good reason. So let's talk about a few of them. Okay. First of all, we're going to talk about Nebius. Okay. NBIS. So Nebius we've owned for a while. It's one of our, it was actually, this is one of the few stocks we bought during the April May pullback. 23.92 cost basis. Bought it right here. Okay. And upsized the position this Friday where my mouse is pointed on the ClickHouse $6 billion valuation. Right. ClickHouse came out with a $6 billion valuation. Yes, one of our core positions. Oh my God, you're such a troll. Yes, one of our core positions, Nebius. But we bought it or upsized it on the ClickHouse news. Bought it on the God, I can't remember whose note it was that came out that Friday when we bought it. But bought on the ClickHouse news, raising a 6 billion valuation. Nebius owns 28% of ClickHouse. Sorry, I lost my train of thought there for a second. Why is Nebius a multi-theme exposure? Well, for a couple of reasons. First of all, with Nebius, you get data center exposure, right? They're one of the best data center players in the world. Um, you look at their GPU data centers in Finland, Paris, Kansas City, New Jersey. Um, what's the sixth one? There's a sixth and seventh one. I'm blanking on it. Anyway, New Jersey, Kansas City, Paris, Finland. They're all over the world of data centers. They're one of the world's biggest data center players. Okay, and in terms of speed of execution for their data center put ups, they've been fantastic. So you get data center exposure when you buy Nebius. What else do you get? Well, you also get exposure from all of their subsidiaries investments. So you get ClickHouse exposure. Okay. ClickHouse doing data observability for some of the biggest businesses in the world, for SpaceX, for XAI, for OpenAI. Data observability super, super critical with training new models. I did a little bit of a speech, I think, on the last workshop about data observability that you can go and listen to if you're really interested in why data observability is so important. But with their stake in ClickHouse, they get that. Then you get Toloka, their AI data business, which Jeff Bezos Ventures is invested in. And we know how important AI data is. And the thing with Toloka is they have a lot of optionality because it's a very young business and they're getting a ton of fallback from the rest of Nebius's AI operations in terms of getting data and feedback from those operations. So it's a young business that's going to benefit a lot from the overall growth and scale of Nebius. And then you also get robotics exposure through AV Ride, right? Which downtown Dallas, they have AV Ride robots everywhere. Like I walk downtown to walk Leo, and there will be robots just driving right by. Leo will bark at them and stuff because he thinks that they're like enemies, but they'll be driving by delivering food and they're just autonomously driving around and people see them in everywhere. They're in LA, San Francisco, New York, Dallas, driving around delivering food. So you get AV ride exposure as well, which is a subsidiary of Nebius. So Nebius is one of the rare and one of the few multi-theme exposures where you want to invest in robotics, you want to invest in data observability, which is a hugely important business. You want to invest in data centers, you can invest in all of them in one through Nebius. And in what was when we bought it, a very, very small market cap, right? Now it's $70. When we bought it down here at 23.92, it was a mid cap. It's now, almost a 16, $17 billion company. Valuation getting a little long in the tooth here? Maybe. But if the data center theme keeps up, we keep seeing this kind of spend and this kind of performance from data center stocks, then there's no need to say no reason to wonder if it does go higher, right? Because to me, this is becoming the leading data center pure play stock if you want to own one. And again, kind of misleading to say pure play because again, I just painted them as a multi-theme exposure, but a lot of people are treating it as a data center exposure aggressively whenever that theme heats up. So multi-theme exposure, and you get the big bonus whenever data center stocks are hot. People tend to flock to this one. So yeah, that's an Nebius for you. That's an example of multi-theme exposure. I was gonna touch on another one here, which is Kratos. So Kratos is another great example of multi-theme exposure, right? They actually had a great earnings call last week. I think the stock was down like 2% post earnings, and then I was listening to the call and I was like, "This is an amazing call." Anyone who actually listened to the call, I didn't listen to it live, but I went back and listened to it after. Danny sent me some excerpts from the chat too. Shout out to Danny, but I went back and listened to it. And it's just a great call. Super bullish. He was very confident on them securing multiple orders. Um, Yeah, they're about as good of a multi-theme exposure as you can get in outside of the primes. You know, primes are obviously going to be multi-themed exposures because they do everything, but Kratos is kind of becoming a young prime in the making. You know, they have UAS drone exposure, they have hypersonics exposure, they have tar directed energy weapons and laser weapons exposure, space systems, which is super hot. You look at satellite C2, you look at their RF monitoring, their cybersecurity program. Um, you know, they have tactical data, everything you can think of in the modern defense realm, they have exposure to. Drones, really their hypersonic and supersonic program ever since their acquisition of FTT, Florida Turbine Technologies, ever since their acquisition of that, it's been superb. So they're across the board just killing it, just absolutely killing it. And yeah, perfect example of multi-theme exposure in aerospace and defense, where a lot of people want to buy the pure play drone plays like UMAC and RCAD and all that stuff. Those are really young, really risky companies. You want to do that, go for it. You know, for me, I'd rather go for a little bit more of a mature play in the aerospace and defense space. It's a harder space to penetrate. And also a play that gives me exposure to a lot of the growth that's happening there and not just the growth in drones. So Kratos is a great example of that. Um, and energy fuels, which we got in recently on this pullback into the 21 EMA here. I actually first started talking about it down here, but missed my entry and then didn't want to chase it on this crazy move. So got in around here. I know some of you did get in back here. Congratulations to those who did. Why is this a unique multi-theme exposure? Well, they're a major U.S. uranium producer. They own the White Mesa Mill. You know, that's the only really operational conventional uranium mill in the United States. If you think about conventional uranium mills, they're pretty rare. And in the United States, you know, White Mesa is basically the only one. They produce uranium, vanadium. They're positioned to benefit if there's a U.S. Strategic Uranium Reserve Initiative. Um, they have a new rare earth program, and this is what makes them a multi-theme exposure and what has made the stock perform so well and hold up so well over the last few weeks. This run back here for them was less nuclear related and more uranium related. Remember, when the nuclear stocks were running, this one wasn't really running. It wasn't really running with Centrus and the SMR plays. But it did start running when the rare earth thematic came up, right? And so what they're doing now at White Mesa, which is their conventional uranium mill, is they are processing uh, the monetized sand, right? Leo, what are you doing, buddy? What? What do you want? Why are you looking at me like that? He's just jealous when I don't pay attention to him. Monetized sand into Leo, into rare mixed rare earth carbonate. And so they're one of the few facilities outside of China that's doing that sort of mining into rare earth carbonate. Now, it's a very early program. This isn't like something that they're doing at scale, but it has made them a interesting dual theme exposure where you get the nuclear exposure, you get the uranium mill exposure, the uranium production exposure, and you also get this sort of rare earth processing exposure, which a lot of countries, frankly, have been awarded multi-billion market caps for without any sort of promise. And so at least they have some promise where that could develop into a real program. So they have basically a shared infrastructure process at White Mesa that is allowing the production of conventional uranium through the milling process and also the fabrication of rare earths. So that makes them sort of a tech defense play, a nuclear play, and a rare earths play. And so I think that's why the stock has done so well and held up so well and probably will continue to do very well under the current policy environment. So that's energy fuels. And then the last one we'll talk about is Galaxy Digital, which we don't own, or I don't own currently. I have owned it multiple times, and the stock has just always shaken me out and been uh, annoying stock to deal with. But I do think this thing is going much higher. Um, and why? Because it's a multi-theme exposure, as so many stocks are. What am I doing? I'm going the wrong way. It's a multi-theme exposure, like so many stocks are in my portfolio. Um, yeah, I can talk about Fubo at the end. Fubo doesn't fit what we're talking about on this workshop, but I can talk about it. But it doesn't fit what we're talking about on this workshop. Um, Leo, come on, man. So anyway, Galaxy has been consolidating very well in the daily here. Okay, it's been a little bit sloppy in terms of the intraday lows, kind of poking through this 21, but it has generally held structure around here. And if you look at the weekly, we're in no danger of anything on the weekly. Weekly actually looks great, right? So you have this nine pushing up, and price held very well here. And to me, I think this gives you exposure to not only all the treasury plays, you look at their operating agreements with the Ethereum treasury plays, the Bitcoin treasury plays. It gives you exposure to one of the biggest or top 10 actual Bitcoin holders in the world on the Bitcoin HODL list. I don't know what number they are now, but they're in the top 10. It gives you exposure to an aggressive asset management team. It gives you an exposure to high margin royalty fees on all of the large treasury assets. And if that theme picks up and everyone starts doing treasuries, they're going to be one of the main brokers of that. You look at Coinbase's partnership with JP Morgan Chase to allow the purchase of stable coins through uh, Chase points. That the broker of that partnership is rumored to be Galaxy as well. Now, I don't know if it's going to end up being Galaxy, but it would make a lot of sense because they've done those types of arrangements for many other companies. Not to mention the stablecoin platforms that they own. We've seen the stablecoin legislation come down the bill. So Galaxy, I think if you're looking at crypto as an industry and you want multi-theme exposure to crypto, to Ethereum, to Bitcoin, to basically every current thematic, stable coins, Bitcoin, Ethereum, treasury plays, and Bitcoin holders, HODLers or whatever, the hodlers or whatever the hell you want to call them. If you want exposure to all five of those things, you get exposure in one thing with Galaxy, in one stock. So that to me makes it very interesting. It's why I rarely do this, you guys know, where um I buy a stock back after I sell it. Like for those that have been following me for years or been in the community for years, you guys know where like if I sell a stock, I usually like stay away from it for a while. Like I'm just like, okay, I got whatever I want out of it. I'll stay away. But Galaxy's one of those where like I bought it, sold it, bought it back, sold it, bought it back, sold it, and just never got the entry I wanted. Um, but I will get back into it. I don't know when, but I will. Maybe I'll get back in higher than these prices. Maybe I'll get back in lower than these prices, but we'll see. But I will get back in. And I think that this thing fits multi-theme exposure as well because, like I said, you have exposure to everything in crypto in one bottle. And I think that there's value to that. Does it make the stock more volatile? Yes, it can. Because when you have bad news about Ethereum treasuries, it's going to probably get hit. When you have bad news about any of its exposures, probably going to get hit more than it should, more than it deserves to. But that's part of the game. You also benefit to the upside when any of those things are working. And sometimes all of those things are working at once. And with crypto, it often works that way, where when Bitcoin's working, Ethereum's working, and the treasury names are working, and everything's working in concert, and then you have one stock that has exposure to all of that, it tends to do well. So yeah, Galaxy also fits multi-theme exposure. So yeah, I know I talked about a lot of stuff there. Obviously, it's going to be recorded, so you can go back and recap it if you want. But we'll do questions for a little bit. If you guys have questions about anything I talked about or anything else, Leo, what do you want? I'll take you for a walk in a little bit. Okay. Fubo, yeah. Fubo, why do I like Fubo? Why do we buy Fubo? I think the story with Fubo is pretty simple and straightforward for me. So, Fubo, the Disney NFL deal that was signed, will bring NFL properties, six games, NFL Network, and Red Zone to Disney platforms, to ESPN. For those that don't know, start of the year, Fubo signed a deal or a potential deal with Disney to merge Hulu Live TV with Fubo's TV offering. Now that platform also hosts. Hold on, let me open the door for Lee. He's gonna keep wanting. So that deal is going to merge those platforms, give Fubo 30% ownership of the JV, and give Disney 70% of the remaining ownership of the JB. So that is a significant deal. It needs merger approval, shareholder approval. There's also regulatory clearance that's still needed. So it's not like it's all said and done, right? And that's why the stock hasn't skyrocketed. And in fact, it's consolidated lower since that deal was signed. But I like this. Pretty much year-long consolidation for all intents and purposes. Stock now, or was above the 9 and 21 EMAs in the 50, but now sort of creep back down. Still above the 50. Structure looks fine to me still. Nothing concerning. And so I'm just counting on this thing to trend up, headed into the merger vote date on September 30th. And in fact, I think the stock's cheap even without it. Like I think it's cheap from an asset basis for an acquisition for someone. It's the growth is slowing, so it's not like a stock I would want to own outside of that. But for the reason of speculation on an acquisition or the closing of the Disney merger, I think it's worth speculating on. So not something particularly high conviction, but that's kind of the thinking behind Fubo. What was the other questions here? PSN. I touched on PSN in my journal on Friday. Is there something else you want to know specifically other than what I wrote? 921 curling up, stocks testing the 200-day here. Earnings were good. Fits the aerospace and defense thematic, which I already like. I think stock has range to like 90 bucks. That's kind of my thinking on PSN. If you have specific questions about PSN, about other than what I wrote in my journal on Friday, I can answer those, but I don't know what else to say. Pretty simple thesis on this one. Nothing too crazy. Does the percentage of your stock that a given holding represents affect your decision to add, specifically when you feel like the stock? Wait, what? Um, no, because I mean that's okay. So I get this question a lot, like, hey, even if you're not buying a stock that you already own, will you tell us when it's a good buy? Like, that's kind of a crazy ask, guys. You know? Like if I notice something that I think is like a decent buy, yeah, I'll mention it, but am I gonna um like monitor all my stocks every day for like good ad zones? No. Like if you learn to read a chart, you can do that on your own. Your solution to that should not be like I'm gonna wait for Stock Talk Weekly to tell me when to add a stock that he already owns. Your solution to that, Mars bars, should be to learn how to read a chart, my friend. I know that sounds like tough love, but that's the better solution. If you learn basic support resistance, like really basic stuff, you can learn where you should be buying and selling. You shouldn't need to wait for me to tell you that. I tell you when I'm buying and selling, but if you don't buy when I buy, then like that's your call, you know? I if you want to if 3 weeks after I buy, you're like, "Hey, where's a good spot to buy?" That's on you, you know? I tell you when I'm buying and when I'm selling, and what you choose to do with that information is up to you. Um, what thoughts on USAR? Yeah, USAR is a great play. It's a little speculative for my taste, but it's a great play. I mean, the volume profile is gorgeous. It's probably going to go to 20 plus. I mean, it's all accumulation here. Basically, no sellers on this chart. Yeah, USAR looks fantastic. I think it's probably going way higher if the rare earth theme stays intact. So, yeah, I don't have too many thoughts on it because I don't know a ton about like the specifics of their business, but if you were to tell me to just look at the chart on USAR and give you an opinion, I would say, yeah, it's very bullish. Your thoughts on MP Materials? MP Materials, yeah, great deal. I mean, I think the easy money has been made here. It's probably going higher though, but yeah, I mean, the easy money was from 29 to 60s. You know, if you were long here and caught this double on one candle, That was the easy money. But is this thing going higher? Probably. I mean, they have basically have direct endorsement from the U.S. government now. So yeah, probably. Look at the volume profile. Like, yeah, I mean, I would say it's going higher. It probably needs to cool off a little bit. It's a little extended on the monthly, but yeah, like in the long run, probably. Looking to add new core positions. I mean, I not yet. I mean, if I do, you'll know. New to go. Videos of multi. Why not buy? Yeah, okay. Okay, so I have a question here saying NVIDIA is a multi-theme exposure. Why not buy NVIDIA? So, guys, when you're a multi-trillion market cap, you're supposed to be a multi-theme exposure. Okay? It's not impressive to be a multi-theme exposure if you're a multi-trillion market cap. That's why. There's no like rarity premium and multi-theme exposures. Things we're talking about do not apply to 500 plus billion-dollar companies. If you're that big of a company, you are going to be a multi-theme exposure by virtue of your size. Like Amazon, Meta, Tesla, uh, like Facebook, these are all multi-theme exposures. No shit. Microsoft and Nvidia, they all are, right? That's not valuable because they're multi-theme exposures because they're $4 trillion companies. So no, that's not relevant at all to what we're talking about. Yeah, so we got the three, what's Espa looking like? CP. Yeah, I do tell you guys when I'm adding sometimes. Yeah, with Kratos after last earnings, I did tell you guys that. Yeah, I mean, I tell you guys as much as I can if I'm adding when I'm doing what I'm doing. But I was talking about when, when I'm not buying something to tell you guys to buy it. Like that's hard to do. Broad market thoughts feel like something maybe crack or we get a strong rate cut in Q4. Guys, I don't do that. I get these questions every workshop. When is the market going to crash? I get this question every workshop. I don't know, guys. Yeah, I think some of you mistake like being experienced in the markets or being good at trading and investing as like having a crystal ball. I've never had a crystal ball. I've never needed one. I was taught by people much smarter than me that you stay long and when the correction comes, you cross the bridge when you come to it. Are you going to give back some of your gains when you do that? Yes, you are. But you're also not going to be stuck on the sidelines during raging bull markets. So that's what I do. I stay long, right? And when the time comes that a correction comes, I handle and manage my exposure then. And the stuff that I'm don't have cushions on or short-term option exposure, I cut those and get rid of those. I hedge a little bit and I wait it out. And on the other side of it, I get back long again. That's what I do. And it works for me. And it's not complicated. Like it's not doesn't require some sort of extraordinary amount of planning or like me to predicting that the markets are going to crash. Like if every time that I thought the markets were going to crash, if I just sold everything, then I wouldn't own anything. I wouldn't own anything. I would just be out of the markets all the time. So, yeah, I don't think like that. I don't think about like what might happen to the markets in Q4. So, I can't really answer that question because I don't think about it. Blah, 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 blah. My password is 20. Fucking wind garage. What is it? Do you think BBBI is a multi-theme when the market's BBAI is not a multi-theme exposure. BBI is barely a company. You guys got to like too many of you guys trade these gimmick super popular tickers that go up a lot because they have like they're AI related or something and you mistake them for real companies. Not like very few of them are real businesses. They're just garbage cans that are wearing like a suit. And they get bid up because like retail traders will bid them up to multi-billion dollar valuations. Don't mistake those for companies that you should hold for multi years. I mean, the charts are nice. They're going to be nice on those types of names. Any other questions, guys, on what we touched on? Sweet green, too expensive. I don't like food stocks. I'm sure the chart's nice though. We can look at the chart if you want to look at the chart. Or maybe not. No, not nice. I assumed it was since you asked about it, but no, not nice. I wouldn't touch that thing with a 10-foot pole. When would I hedge individual stocks? If it's a low conviction position headed into a binary event, that's the only time I hedge individual stocks. I don't hedge core positions. If I have an individual position in a stock headed into a binary event, such as an earnings or an announcement, and I do not have a cushion, that's when I hedge individual stocks. That very specific scenario that I just explained. That's the only scenario. Still holding GSRT, yes, but I'm gonna sell it pre-merger. I only put that note on the thing because people kept reading it as core and misunderstanding why it was listed as core. So I put the note clarifying that on the last update. But yes, I still have it. I'm just not gonna hold it through merger because people assumed I was gonna hold it through merger for some reason. So anyway, why is ASTS not a core holding? Because I don't have that as much conviction as the ASTS bros do on it. Sorry, Bill. But I have a good cost basis, which is why I still own it. When running DD on a potential thematic or US strategic company, what data points do you place the most weight? How do you identify these differentiating factors that allow you to build conviction? That's a good question, but I don't know if I have a good answer. Like, I don't know if I have a specific answer for you, but that is a good question, and Joe. Um, well, let me think about it. I would say I probably place the most weight on like I don't even know if placing the most weight is the right way to phrase it. I look at a blend of is the theme going to be attention rich more than if it's going to be catalyst rich? Because I used to think about it in a way of like, okay, is there going to be enough news flow around it, right? Which would make something catalyst rich, right? Now, I think it's a fine way to think about it, but I think it's better to phrase that about like, is the thematic attention rich? In other words, yeah, you want news flow, but is it the type of thematic that's going to get and capture and keep public attention, right? Like things like nuclear energy are good examples of that. Things like space and satellites, like that's a good example of that. These are like there's inherent sex appeal built into the thematic that makes it attention grabbing or whatever. I mean, that maybe not the best way to phrase it, but that makes the thematic attention grabbing. And then on top of that, you get a catalyst rich environment for all the PRs and the government policy and all the other stuff that happens. So, um, yeah, I would say that's one aspect, like how attention rich the environment is. And another thing I would say is like, is it the type of theme that is like amenable to capital investment? Like, is it the type of theme that will welcome and you could envision rapid capital investment in because there's some themes where it's like, oh, it's cool and interesting, but I couldn't imagine hundreds of billions of dollars just rapidly flowing into this industry. But with some themes, again, nuclear energy being a good example of them, you can imagine that. You can imagine that level of step up in investment. And that's really what transforms the valuations of companies quickly is this like globally concerted effort to invest in the theme, right? Like why have AI companies exploded in value kind of all together, right? Like you look at the private market valuations of these companies like OpenAI at 500 billion, Anthropic at I don't know what it is, some ungodly number, SpaceX at 500 billion. Why do these companies fetch those valuations? Because there's this like global globally concerted effort to invest in the theme. And that money has to go somewhere, right? And very often it just flows directly into the valuations of these companies by virtue of the market assuming that they're going to receive benefit from all that capital inflow. So I would say attention richness, how uh, what's the word I'm looking for? Welcoming is not the word, but how receptive it is to high levels of immediate capital investment. Um, I would also say, is the asset strategically important? Now, a lot of times when they say people hear strategically important, they think like, okay, well, that's anything. Yeah, if you think of strategy broadly. But when I'm saying strategically important, I'm talking about from a state level, right? From a national interest standpoint. Is it strategically important? That's a big differentiating factor, right? Because something that's strategically important in the sense that it's like it makes a lot of money, that's one thing, versus something that's strategically important where it may not make a lot of money, but it is strategically valuable to the country. Centrus Energy is a great example of this. The company doesn't make a lot of money, but the asset is strategically important to the United States of America because it's the only domestic uranium enricher. So those three things I would look at. Like and when I could probably come up with like five or six more, but I have to really give it some thought. But that's a good question. There's no one fire off thing I can give you though. It would be like multifaceted points of differentiation. Any resources, blah blah blah. BTC is ripping. What? Yeah, it is ripping. Wow. Poly market Trump 2028 is higher than the Cowboys Super Bowl. I heard the other day in space you're not really into rideshare stocks, but then why Lyft exposure is only because yeah, I just think Lyft's really cheap. I really don't take contrarian plays a lot, but I'm trying Lyft out. And it's not like a super high conviction position. If it really doesn't work, I'll get out of it. But I tried Lyft out because I just thought it was way too cheap. Just feels way too cheap to me. I feel like the stock should be trading twice where it is, but I could be wrong. I'm not always right. Some of you guys like some of you guys are like just assume that I'm gonna always be right. Guys, you have to get used to me also. Like I also take losses, guys. No one wins on the markets all the time. I win a lot more than I lose, though. But, that's all that matters. Did you follow Yonezu on the AI short? No. If I ever follow Yonezu or anyone on anything, I will tell you that I'm following them. Don't just assume that I'm following anyone on anything. No, I didn't follow him, but I do think it's a good idea. I think that earnings was terrible. How many core positions do I typically have to give or take? There's no answer to that. There's no like I don't go into a year saying I'm gonna add three core positions. So the answer is it depends. Some years none, some years two, some years one. Sometimes I go 2 years without adding one. Just depends on what I see happening. And keep in mind, there's core positions that I've had before that I've also sold, right? Like core position doesn't mean never selling. That's not what it means. It means for now, it's a core position. In 2 years, it might not be. Um, in 6 months, it might not be. Cool. Any other questions? Let me see if anybody put any. No, nobody put any in the chat. Yeah, I get the nat gas thing. When people are like, "Oh, nat gas is a much faster timeline or whatever." I just don't think nat gas will ever trade at the multiple that nuclear stocks do because there's just not enough sex appeal, not enough like that kind of stuff matters. Nat gas stocks are just not going to trade at those multiples. They're not. I've heard this argument too. People are like nat gas is more ready than nuclear. Like it's gonna. Some of the stocks might have crazy moves. They might have crazy moves in the interim. Like they might have 200% moves intra-year. But do I think they're gonna hold those multiples? No. And I don't think the nuclear stocks will either. By the way, like just because I like nuclear doesn't mean I like the valuations of SMR and Oklo and NNE. I think all those stocks are gonna crash. All the pre-revenue stuff will crash horrifically, like minus 80%. I'm not saying it's going to happen now. Might be a year and a half, 2 years before it happens. No, I can't. No real high level thoughts on that. You just need to learn to do it. Like you just got to get in the mud. If you want to be a good stock picker, you have to get in the mud. Find a theme that you like, pull up your LLM, your favorite LLM, and get in the mud. Like just get in the mud. Ask yourself questions about you things you don't know. How does this process work? How does uranium refinement work? Look that up, and then you'll go down a rabbit hole. Right? Look up what are all the steps in uranium environment? How do I get to HALEU? What are the different levels of percentage of uranium environment that are applied to different products? Which are more strategically important? Which types of uranium refinement happen where in the world? Who does it? Like that's how I found Centrus 4 years ago when I first bought that stock. When I first owned that stock when it was $30, when I found Centrus Energy, that's how I found it. And nobody in the world was talking about it back then. Not nobody in the world, but nobody on Twitter was talking about it back then. Search LEU. I think my first post is from 2021. Just sit down and get in the mud. Like go down a rabbit hole, learn about an industry, and you will find stocks. I promise you. And you will find better stocks than the scanners find you. I don't use scanners. I don't use like everyone on Twitter is like, oh, here's my scan. Go find the best stocks. Go find high type flags. Like you're not going to pick the best stocks doing that. You're not even going to know how to differentiate them. You're going to see six high type flags. You're going to be like, this one has a better volume accumulation profile. I'll get along this one. And all along, it was a stock that wasn't on that list at all. That was the best in the industry. Need context. Always. And to get context, you need to dig and get in the mud and understand things. That's my high level thoughts on picking a theme. GG, good night. I thought I just about follow your trades and then Lambo. I mean, some people have done that. Some people have actually done that, but you can do it however you want to do it. Guys, the chat is not in the Zoom chat. Go to the Stock Talk Discord chat. I know you want attention. Excited for GTA 6 and it's not for out for another year. Okay. I'm gonna take Leo down if there's no other questions. No, GB, you already asked me that. I'm not gonna use Savvy Trader to maintain my portfolio. I don't know why people keep asking me stuff like that. No, what you see in the Discord is what you get. That's how we do it. I don't use third-party platforms other than Discord and X. Can you share an example of when you sold a position? No, Biggie next time. Um, that used to be a core position. All right, guys, take it easy. Recording will be up.